We're going into advanced uranium development now, all in Africa. There we go, there's the disclaimers. We'll get straight to the company. So GOVIEX, founded 2007 by Govin Friedland, Robert Friedland's son, focused initially on our development projects in Niger. In 2016, 2017, we started picking up other projects in Africa, namely in Zambia and Mali. We're now sitting with two fully permitted projects, ready to go, moving them into final feasibility study and then in for construction, and an exploration story in Mali. Big resource out there as well, but with a lot of exploration upside. We like Africa. One of the key benefits of Africa is you get things done. These are governments that are driven by commodity GDP. Compare permitting in Niger, took us 4 months to get our mining permit with an IFC-backed ESIA. So you can get things done. The new Zambian government's coming out very strong for new development, new project development, new mining code that's very FDI driven. So Africa, definitely a place for growth. It's about 6% GDP growth out of Africa. So doing all the right things. These are all mining jurisdictions, so getting skilled personnel now in Africa is relatively straightforward. Some comments on the market, because obviously that's really where it is, and we've got a whole panel this afternoon which we're sponsoring at 4 o'clock if you want to just hear only about the market. But in simple terms, we're looking at about 2.6 to 3% growth in the uranium market from the nuclear reactor growth, predominantly off the back of increasing Asia. COP26 in Scotland last year saw a lot of countries pushing for the green credentials out to 2050. We're seeing the Russian impact coming through. Sanctions in Russia is causing a lot of companies to sanction themselves out of supplies of Russia. That is squeezing the market that's out there and forcing greater focus on where energy is coming from. So you're seeing more and more governments around the world putting nuclear in as part of their green energy focus. From a supply side as well, this year, 190 million pounds consumed, 123 million pounds produced. The market is being filled by secondary material. Half of that was coming from inventory drawdown. That inventory drawdown is starting to reach the end of what can be done. Previously, we were looking at about 2.5 years for US utilities. They're down to 16 months of remaining inventory left. The Sprott Uranium Fund has come in and started to mop up a lot of that material. They now hold 55 million pounds of uranium. Secondary supply was predominantly coming from government sales and predominantly Russian government sales, with the sanctions on that material as well, squeezing that side. So that secondary supply that was filling the gap is being pulled down at the same time. Utilities are starting to worry about diversification of supply, increasingly so, particularly after the actions in Kazakhstan earlier in the year and now what's going on in the Ukraine. So that's really positions a company like GOVIEX in an unsanctioned jurisdiction like Africa. So our focus is very much on getting our projects going. We're looking at getting our Matawela project going in Niger and then bringing our Matanga project straight in behind it. So we are able to get into production, planning 2025 for the first one, 2027 for the second one to come through. You'll be waiting for a lot of the Canadian explorers, developers. They'll still be permitting well past that date. We start with Matawela, Niger. We own 80% of it. The government owns 20%. They get a 10% free carry. We did a deal with them a few years ago where they acquired 10% because we owed them $14.5 million. They decided it was a good deal. Rather than us struggling to pay it, they would take it as a stake we could buy back. But the best thing about this, we are right next to Orano's mines. They've been operating since the early 1970s, produced 140,000 tons of uranium from those two mines. All the infrastructure is there. One of those two mines, Cominac, closed last year. The second mine, Somayer, due to close probably around the end of the decade. So well-trained labor force, power. Big power line runs straight past our property to the post, 20 Ks away. We can connect in on it. Where we are on this project is last year we completed an updated PFS. We wanted to structure it around the debt market, not the equity market. The hard money to get is the debt money from a project financing point of view. So we removed a lot of the risk we focused on making sure we could get a debt-to-equity spread of at least 50% on this at a $55 thing. Since then, we've been working on the FS. That FS is due to be completed in the next few weeks. Again, looking at that similar target price. Last year, we appointed Endeavour Financial. Their speciality is debt financing projects in Africa. We brought on a gentleman called Chris Lewis to be our uranium marketing guy. He's been selling uranium for BHP out of Olympic Dam, for Cameco, and for Olympic Uranium One for the last 30 years. So we're well on the place already. On the on-market RFPs already, but we're starting to have those conversations about the off-market contracts that we'll need to fulfill this project. So this one, looking to get it financed by this time next year, 2-year construction, 2025, looking for production. That is really fast in our industry. Matanga follows straight afterwards. We picked this one up from Denison back in 2016. We added another project to it. 3 permitted licenses adjacent to each other. A lot of exploration upside. A very simple open pit heap leach proposition, very low capital. This is one of the lowest capital uranium projects in Africa from an intensity point of view as well. Again, the upside is there. This one is a PEA. A lot of the background information from it is actually at PFS standard. We combined 2 PFS, but Denison had added a large resource in Dibwe East. It's about 40% of our total resource. We started drilling that last year. That drilling has shown that we get a great correlation. Our geologists have signed off the drilling. We'll finish that this year. We're doing the hydro work, the geotech work, so all the field work for the FS is going to be done this year. Next year, we'll move into the capital engineering stage. So this one can come up very fast behind Madawiela to put us into 2 uranium projects in production. And then we have Falea. This used to belong to a company a long time ago called Rockgate in the last cycle. Rockgate had a $300 million market cap with just this project. Shows what the uranium market can do in a bull run. Interesting project, 30 million pounds of uranium, got silver in it, got copper in it as well. It's on 2 major gold trends. You've got IM gold, you've got B2 gold, both on this on the extensions on it. What we've been doing with it is actually trying to understand where to explore for further uranium, but also to understand the potential of it with the other commodities. So we did a lot of induced polarization. We can see that there's a big IP target sitting right underneath the uranium, right up on the fault. So we're currently drilling that, waiting for the results to come through to tell you what's going on there. Interesting exploration play, but at the end of the day, our focus is on those uranium developed mines. If this turns out to be a copper play, we will spin it out, or a gold play, we'll spin it out. But we'll focus on being what we are, which is a uranium company. We restructured our board recently. It's all about development, taking us forward. We're well cashed up at the end of last year with about $9 million. Got a good liquidity. Of the other shareholders, about 50% is uranium funds, ETFs, big funds holding stock there. The rest is liquid. But the key driver in the 2007 cycle, the best performing shares were the 2 companies that built a mine in that cycle. Paladin Energy Fuels. They more than doubled what the market achieved. And that's very much where GOVIEX finds itself. 2011, most investors made money in uranium for the takeout stories. 3 of those big takeouts were all Africa takeouts because governments, SOEs, can own 100% of the projects in Africa. So where do we like it? We love the uranium market. We've had a pullback, but trust me, the utilities need this. It is getting tighter. We've got a lot of exploration upside, but key, 2 permitted projects. They're already got those permits, which are the key foundations. Focusing our projects through their economic studies, really focusing on getting the first one into production. Thank you very much.